Hello everyone and welcome to today's lecture. So today we are going to discuss, remember in last lecture we discussed chapter 8 and we did a few questions of chapter 8. Today we are going to do some more questions on the chapter 8 and then chapter 9 and chapter 10 and accordingly their questions. Okay. What I will suggest is you please ask the doubts as and when you have. I want maximum participation from your side, guys. That is very, very, very important. Okay. A quick recap before we start of chapter number 8 and then we'll move to the questions. So, recap that is chapter number 8 basically talks about SA 800 series. That is a special consideration cases. One, wherein SA 800 talks about that the audit of financial statement when prepared in accordance with special purpose framework, that how to do audit in case of the financial statements are prepared with special purpose framework, how to do reporting, and the important parts of that. SA 805 talks about audit of financial statement with a specific or a single item, not the whole set, but only one item like P&L, balance sheet, statement of changes in equity. But whereas SA 810 talks about engagement to report on summary financial statement, like summary of the financial statements, the whole set of financial statement. Now, in these cases, how to do the audit, how to report upon, what report should contain, okay, all these things have been, provided in these essays. And this will be the first time that you will be looking into the SA 800 series. Clear? Okay. Based on this, remember last time we did one question also on this particular topic. Let's see some more. Okay. Eco Energy Solutions is a pioneering company in the renewable energy sector specializing in solar projects. The company is preparing its financial statement in accordance with the Sustainability Accounting Standard Board's framework, a special purpose framework designed to capture financial and non-financial performance of the company in the sustainability sector for its investment. The audit firm, Assurance Professionals LLP, has been appointed to audit the Eco Energy's financial statement for the year ended 31st March 2024, prepared based on the SABS framework, that is the Sustainability Accounting Standard Board's framework. During the audit, the engagement partner identified that the Eco Energy's financial statement include various ESG metrics such as carbon emission, water usage, employee safety statistics. These metrics are not typically found in the financial statement prepared under general purpose financial frameworks like India's. Also, the company's annual report contains extensive disclosure on sustainability initiatives, social impact projects, governance practice. These disclosures are prepared in accordance with the GRI standards, a widely recognized framework for sustainability reporting. You as an engagement partner kindly guide them regarding the following matters pertaining to the audit of Eco Energy SASB framework financial statement. Number one, acceptance of the engagement. And second, planning and performance of the engagement. Third is a format about opinion. So first of all, you tell me which essay will be applicable here. Okay. And what are the things you will take care when it comes to the acceptance of the engagement? Come on, guys. Pretty easy. Nothing difficult over here. If you have already revised it, like if you have already gone through it, it's similar that what we have done till now. Come on, guys. No Rakesh. So, which essay will be applicable over here? Anyone? Come on quickly. Which essay will be applicable in this scenario? You are auditing the financial statements of Eco Energies SASB based framework based financial statements. Just now, in a summary, also we discussed this point. Come on, quickly. So, this is, I'll tell you. So, this is based on SA 800. Now, why? Why this is based on SA 800? Simple. SA 800 talks about audit of a financial statement prepared in accordance with the special purpose framework. So this is a special purpose framework, that is SASB's framework, which is different from India's, that is written on the question also. This one, see, these metrics are not typically found in the financial statement prepared under the general purpose framework like India's. So this is a special purpose framework. And if special purpose framework is there, the audit under special purpose framework is there, SA 800 should be applied. Yes or no? As a result, the applicable essay in this scenario basically is essay 800. Now, the next question. Now, I told you the essay. What is the requirement with respect to acceptance of engagement? Can anyone tell me the requirement with respect to acceptance of the engagement? Come on, guys. What is the requirement with respect to acceptance of engagement under SA 800? Pretty simple. It is pretty much straightforward answer. There is no difficult answer in that. Just think once. Okay, I'll tell you. So the requirement under SA 800 with respect to acceptance of engagement is similar to what is there in SA 210. So SA 810, 800 specifies that follow SA 210. There is no difficult answer in that. Yes, the SA 800 talks about applicability of SA 210 when it comes to acceptance of the engagement. And it talks about that, okay, before accepting the engagement, just verify whether the financial reporting framework is applicable. See, in SA 800, what is something new? The different financial reporting framework, special purpose financial reporting framework. Now, whenever something new comes, it's your responsibility to verify, okay, whether this new should be appropriate or not. Okay. Same way in SA 800, when it comes to, auditing the financial statement as per the special purpose framework, which is new in the picture, verify whether that is acceptable or not. And accordingly, once you verify, okay, you decide 3 things on that. So when it comes to acceptance, first of all, SA says that follow SA 210. Afterwards, it guides that, okay, even you follow SA 210, just check for new special purpose financial reporting framework. Okay, that whether the new special purpose financial reporting framework is acceptable. Now, how to decide whether this is acceptable? On 3 things. 1, purpose, intended users and the applicable reporting framework in that circumstance. Remember something I have already discussed, that is PIA, purpose, intended users, or applicable financial reporting framework, which is there in that particular circumstance. Or you can say PUA, PIA or PUA, both are same. Purpose, user, and applicable financial reporting framework. If these three things are there, the financial reporting framework is acceptable. If financial reporting framework is acceptable, fine, go ahead and accept the engagement. Simple. Any doubt? Any doubt till now? So acceptance is clear. Acceptance of the engagement, pretty much clear. Okay. Now the second part, planning and performing an audit. What is the requirement of SA 800 when it comes to the planning and performing of audit? Come on, guys. What is the requirement of SA 800? Or in this scenario, what should be the requirement with respect to planning and performing the audit? Anyone? No? Anyone, what is the requirement with respect to planning and performing the audit, which is enumerated in SA 800? Okay. So, I'll tell you. It's pretty straightforward and simple. Just like acceptance. So, when it comes to planning and performing the audit, the SA 800 requires us to follow SA 200, 315, okay, and other relevant essays which are applicable in the scenario. So it says that follow other essays, 200, 315, and other essays which are already applicable in the scenario. So there is no specific requirement than what we have understood or learned till now. So again, although you might be seeing a new essay, essay 800 series, something different, no. It says that whatever you have learned till now, apply that only. But in relation to special purpose framework. Are you getting my point? For example, SA 200 says that auditor is required to comply with all the essays relevant to the audit. So if you apply SA 200 over here, means all the assets will be applicable. SA 315 requires the auditor to obtain understanding of the entity, its selection of accounting policies, and application of accounting policies. Remember SA 315? Now, in this case, when the financial statements are prepared in accordance with this special purpose financial framework. Now, this could be the special purpose financial framework, or this could be a provision of the contract also. In that case, understand what is the requirement of the framework or the contract. Understand why the financial statements are required to be prepared in that way. Why? What is the need to prepare the financial statement in this way? Why should I follow this particular, SASB framework to prepare the financial statement? What is the need today? See, if today management is preparing their financial statement based on Ind AS, we can understand the requirement is coming from the Companies Act or some other law which requires them to prepare the financial statement. Same way, why a company will choose to prepare its financial statements, like they are preparing Ind AS, but over and above they are preparing some other financial statement also. Why? So once you understand that why, that is there under SA 315. Are you getting my point? So 200, 315, other essays, all are required to be followed when it comes to the planning and performing the engagement. Any doubt? Any doubt till now? And the third part, forming an opinion and reporting on the financial statement. So tell me, what is the requirement that is required to be followed under forming an opinion? What essay says that? What is the requirement of essay 800? Abrakesh, whatever you have learned till now in the essay, from 200 series to 700 series, everything. Come on, guys. What is the requirement regarding forming an opinion and reporting on the financial statement as per essay 800 series? What essay 800, sorry, essay 800 says about forming an opinion? Not series, just essay 800. So what essay 800 says about forming an opinion? Come on. Anyone? Come on, quickly. Pretty easy. No? Abhirakesh, what essay 800 says about forming an opinion and reporting on financial statement? Essay 800 says that, okay, usually for forming an opinion and reporting, which essay do you use? Usually for reporting and forming an opinion, which essay do you use? Anyone? No? So generally we use essay 700, and here also for forming an opinion, okay, for forming an opinion, we need to use or apply essay 700. Okay. However, there is one additional requirement. Over and above essay 700, there is one additional requirement. Can anyone tell me that? So the additional requirement is first that it requires you to describe the applicable financial reporting framework and its selection, because that is something new in the picture for this particular essay or for this particular scenario. The financial reporting framework is new, special purpose financial reporting framework, and whenever something new comes up, you have to disclose at when you are reporting. make sure that is included in your reporting. So we are describing the applicable financial reporting framework and its selection. And second is alerting the readers that this financial statement is not India's based. This financial statement is prepared based on the special purpose framework. Are you getting my point? So these two things are the additional requirement over and above application of SA 700 with respect to forming an opinion when you are doing the audit of an entity's financial statement which are based on special purpose framework. Any doubt with respect to this question? Any doubt? Any doubt, guys? So I hope you have now understood the concept and the application of SA 800 in detail. Let us see one more question on the similar lines. Quantum Tech Ventures Limited. Quantum Tech is a publicly listed technology company specializing in artificial intelligence and machine learning solutions. The company has a complex capital structure with a multiple classes of shares, warrants, and convertible instruments. Due to a recent regulatory inquiry focusing on their fair value of intangible asset, Quantum Tech's management has engaged AAM-LLP, okay, to perform an audit solely on the statement of financial positions, balance sheet as of 31st March 2024. So you have to audit only balance sheet. That's it. The engagement does not extend to the audit of complete set of financial statement. Okay, understood? During the planning, Assurance Master or the AAM-LLP discovered the following. The balance sheet presented to them is formatted and structured identically to the balance sheet that would be included in the complete set of the financial statements. The notes and accompanying the standalone balance sheet are minimal and lack specific disclosures regarding the valuation methodologies and assumption used for intangibles, which are a significant component of the balance sheet. Valuation of intangible asset is inherently linked to company's income statement and cash flow statement. These key assumptions used in the valuations, such as projected cash flows, discount rates, are derived from these other financial statements, and appropriate referencing is being done with the complete set of financial statements. In accordance with SA 805, okay, audit of a single financial statement and specific element, accounts, or items of financial statement, evaluate whether the challenges AAM-LLP faces in this scenario due to insufficient differentiation of the balance sheet from the complete set of financial statement, and discuss the appropriate course of action for AAM-LLP to ensure the compliance with standard. Simple. So there is one part which talks about presentation of disclosure. Are you with me? So there is one part which talks about presentation and disclosure. That presentation and disclosure, they are saying that, okay, balance sheet is the similar one which is prepared as per the financial statement, complete set of financial statement balance sheet. However, that lacks the relevant disclosures. Okay. However, that lacks the relevant disclosure. So what could be the appropriate way to address this scenario as per SA 805? Can anyone tell me? Okay, what SA 805 talks about, okay, auditing the single financial statement when it comes to, you don't have a sufficient information. So what SA 805 says, when it's come to the auditing a financial statement or a single financial statement, when you don't have a sufficient information, come on guys, I'm talking about sufficient information. You don't have, or if you are not able to separate out the financial statement, single financial statement from the complete set. So see, here there is a single financial statement and you have a complete set. Now these both are same and identical. Okay. And you are not able to differentiate between both. You are not able to segregate. You are not able to identify which is the complete and which is the single. So differentiation or difference is not available. What will you do in this scenario when you are not able to differentiate? Anyone? So what SA 805 says, I'll tell you. No issues. What SA 805 tells that in this scenario, SA 805 says that if you are not able to differentiate, no issues. But what you do is, okay, if you are not able to differentiate between the complete and single FS, ask management to keep both separate. Ask management to keep both separate. And once if both of the financial statement, okay, the single FS and the complete SEF, if they both are separated out, in that case, issue the opinion, no problem, issue the report. If you are not able, if the management is not listening, do not issue the opinion or the report until you are satisfied with the differentiation. So, simple. Ask management to differentiate. If not, and if yes. So, if yes, then this is for the yes and this is for the no. If management differentiates, then issue opinion. Simple. If management does not differentiate, you do not issue opinion. Okay, simple, straightforward. Clear till now? Any doubts? Pretty straightforward. There is nothing difficult in this. You might see a big question, but the answer is pretty simple. Any doubts? You just need to focus on the basics of the audit. Trust me, it is logical. If you are not able to differentiate, what you do is ask them to keep it separate. And if they are not able to do not issue opinion. Simple. That's a basic audit functionality that we are doing over here. Let us see one more question. A very good one. Global Mining Corporation Limited is a publicly listed company engaged in the extraction and processing of various minerals. Due to a significant fraud involving overstated inventory balances and fictitious sale transaction, the statutory auditor IALLP has concluded that the financial statement for the company year ended 31st March 2024 are materially misstated and has issued an adverse opinion on the complete set of financial statement. Very important point to note, that issued an adverse opinion on the complete set of financial statement. Subsequent to the audit of the complete set of financial statement, GMC's management requested IALLP, that is the auditors, to perform a separate audit of a separate audit of the statement of cash flow. Okay, for the same period. The management believes that the cash flow statement derived from the underlying accounting records and bank statement is not affected by the fraudulent activities and can be presented fairly. During the planning of the cash flow statement of audit, integrity assess the following. So it is the IALLP, the auditors assess the following: the nature of fraud, internal controls around the fraud, okay, regulatory requirements in this scenario. So they analyze these three areas, that the cash flow statement is derived from the cash receipt and payments, which may not have been directly affected by the fraudulent activities. Okay. Internal controls, that internal controls over the cash transaction are generally strong, with the segregation of duties and regular reconciliation of the banks. Third one is a regulatory requirement, that the applicable securities regulation require the publication of the audited cash flow statement alongside the annual report. Okay, even in the cases when an adverse opinion is issued on the complete set of financial statement. So they analyzed what are the requirement. Now, you as an auditor doing audit of a cash flow statement, that is a audit of a single financial statement. Okay, now analyze the situation and tell me that what reporting you will do in this scenario, given that the reporting which is done for the complete set of financial statement is an adverse opinion. Okay, so how this adverse opinion is going to impact your report on this single set of financial statement? I have an adverse opinion on the complete set. How that will be impacting your audit opinion on the single set? Tell me. Tell me, come on. We have discussed this part in the last lecture also. Come on, guys, tell me. Yes, very good, Abhagarakesh. What else? So you are on the correct path. Yes, absolutely correct. But there is something more to that. Come on, guys. See, basically, Abrakesh, when I'm talking about the opinion, okay, for the opinion, why SA 200 will come into the picture? For SA 200, why, for opinion, why SA 200 will come into the picture? So tell me, what is the requirement over here? See, pretty simple. One side I am giving adverse opinion. Now another side, if I issue a unmodified opinion saying that the financial statements, okay, or the cash flow statements are not affected by fraud, it is a contradictory statement. On one hand, I am saying that okay, financial statements as a complete are misstated materially. The impact is pervasive. That's why I'm issuing adverse opinion. On another hand, if I issue unmodified opinion when it comes to the cash flow statement, won't it be a contradictory? So SA 805 says that okay, in case when you have a adverse opinion as per SA 705, at the same time SA 705 does not allow unmodified opinion on single set, on single FS, when the complete, or when I would say when the auditor has issued adverse opinion on complete set. Two different contradictory and opposite opinions cannot be issued on the same thing. My adverse opinion is on the complete set, which includes cash flow also. And if I issue unmodified opinion on cash flow, it will be contradictory. As a result, I am not allowed to do that. Unless there are certain conditions. If you fulfill that conditions, then you can do that. Can someone tell me what are those conditions? So usually it is not allowed, but there is an exception. Can someone tell me about that exception? And what we are discussing as of now is also covered in SA 705. So we have already discussed once in SA 705. We have already discussed this when we were discussing SA 805. Can someone tell me about that exception, that when you can issue two different opinions, that is one unmodified opinion on single FS and one adverse opinion on the complete FS? Usually 705 doesn't allow. But what is that specific scenario or exception where it is allowed? Anyone? Okay. So the three conditions of the exception. Now, exception to this comes with three conditions. If you satisfy these three conditions, then you can do that. One, auditor is not prohibited by law. Means I am not prohibited by law to issue different opinion, okay, on one on complete set, second on single FS. Second, opinion expressed in the audit report should not be published together with the audit report containing adverse opinion. Means both opinions should not be published together. Third, And the very important part, that specific element does not constitute a major portion of complete set of financial statements. If you can satisfy these three conditions, you will get an exception to issue a different opinion compared to what you have issued on the complete set. So you can issue adverse opinion on the complete set and unmodified opinion on the single FS. Clear? So usually SA 705 doesn't allow different opinions. But if you have this exception, if you are falling in these categories, yes, you can issue. Avrakesh, can you explain your query more? Which opinion to be reported first and where reported first? No, so both opinions should not be published together. So there is no requirement that you should report this first or report this second. There is no such requirement. That depends upon the type of engagement. Let's say, for example, your engagement on the complete set, you have a due date to report on, let's say, 30th. And in this, you have a due date to report on 29th or 28th. This will go first. So that totally depends upon the due date and, your scenario, case to case basis. Anyone? Any doubts? Any questions? Any doubts? Any questions? Yes, specific element means that single FS. Sometimes we are auditing only a specific element means a single line item of the financial statement also. Like we are only reporting on the fixed asset or fixed asset part in the balance sheet or current asset part in the balance sheet. So that is specific element I'm talking about. It could be a single FS, could be specific item or a specific element. Any doubt, guys? No doubts? How many of you have already seen this particular document? Or how many of you are referring? I'll show you. How many of you are already referring this one? Saransh, last mile referencer for auditing. This has been issued by Board of Studies. And this is a very good and important document, I would say, to refer to. Study material, very good. It covers all the essays in a chart format. Okay. So it becomes very easy to revise and go through all the essays on a speedy basis. For example, we will go through now the chapter 9 from this one so that you can get familiar with this particular Saransh. Okay. What is chapter 9 about basically? Now, when I talk about chapter 9, it talks about your specific kind of uh, engagement standards. That's a related service standards. So standard on related services, which is known as SRS. Okay. Now, what is this SRS and where it is used and how they are different from normal essays? So for the first time, we are using SRS, not a essay. It's not the standard on auditing. It is the standard on related services. So the first difference here is that we are not doing audit. It's a related service. Understand? It's not audit. SRS is not audit. It's on related services. Now we need to understand what is related services. Now related services could be your agreed upon procedures which are there under SRS 4400, or it could be compilation engagements which is there under SRS 4410. These two are the related services as of now under SRS. Okay. Abrakesh, you can download from the BUS portal and you can print it out. It is available for free. Are you with me, guys, on this one? SRS. So it's not the audit, it's a related service which could be agreed upon procedures, or we call it AUP, and which could be compilation engagements. Now, under related services, okay, when I say assurance engagement, I am expressing a conclusion to enhance the degree of confidence, okay, on the subject matter. So basically, I am expressing a conclusion. It's a kind of a reasonable assurance. I'm giving kind of a assurance. But not all engagement performed by the practitioners are assurance engagement. So if there is an engagement which is not an assurance engagement, means I am not giving any conclusion or opinion, that is, will fall under the category of related services. Now, what is agreed upon procedures? In related services, we need to understand what is agreed upon procedure. Basically, when it comes to the agreed upon procedure, okay, it is any procedure that you agree with the management or those charged with governance or any of their specific personnel to perform, under which you are not issuing an opinion. Simple. When I talk about agreed upon procedures, so here I am not issuing opinion, but I am performing agreed procedures. As the name suggests, agreed upon procedures. The procedures I have agreed with you to perform. It can be anything. For example, preparation of a tax return. It's an agreed upon procedure. Once I'll perform the procedure, I'll issue my report. What procedures I performed and what was the outcome of the procedure. Simple. So agreed upon procedures here, you agree to perform certain procedures, but not you are not issuing an opinion. Understand that. So here your reporting rather is based on the factual findings. Reporting is based on factual findings. Are you with me till now? Any doubt? Any doubt? No? Okay. I'll come to that point, Abrakesh. Very good and very good, very important question about the data. Okay. What is our responsibility when it comes to the data in SRS 4400? Now, let me tell you. Okay. So, when I am doing the procedures that are agreed already, okay, and if I come to know about any of the data which is not correct, I may raise that question to the management. Okay, I may raise that question to the management, but I am not required to verify the validity of the data. Understand that thing. That it's not my responsibility to validate or to do audit of that data. I have to rely upon the data which is provided by the management to me. Are you understanding that point? So it is not my responsibility to validate the data. It is the responsibility of the management to verify that data. Now, what is the purpose of this standard basically, 4400? The purpose of this standard to guide the auditor when he is performing the agreed upon procedures engagement. And what is the guidance that is there? Number one, that comply with all the code of ethics and ethical principles. Now, which are those ethical principles? Integrity, objectivity, professional competency, due care, confidentiality, professional conduct, and compliance with the technical standards. You comply with all the ethical principles. However, independence is not part of this one. So, independence here for this particular engagement is not mandatory. Okay. Independence is not a mandatory requirement. Why? Because we are not issuing any opinion. We are not issuing any assurance. We are not giving any assurance. What we are doing here is we are reporting based on the factual findings. Management is hired us for some specific procedures. Clear till now? So independence is not required. Any doubt? And when you are going to perform this particular agreed upon procedure, you need to define the terms of engagement and have the understanding with the management on the terms of engagement. So terms of engagement should be defined in advance itself. Pretty simple, straightforward. Now, when you are planning and performing the procedures, okay, understand few things. Number one, what is the nature of engagement? What type of procedures you need to perform? Okay. Also, you need to understand that the procedures that you are performing are not for audit. They are not, procedures that will give any kind of assurance. So you are not doing audit, neither giving any assurance. You are performing some procedures. You need to understand what will be that procedures, how much detailed that procedures are required to perform. For example, management has asked you to perform reconciliation between ledger and subledger for account receivables. So management has asked you to perform example that reconciliation between ledger and subledger of account receivable. That is, this is your agreed upon procedure that you need to perform. Now over here, you need to understand, okay, I'm not performing audit. So I might send an confirmation for the subledger for the AR balances. Here I'm not performing audit. I will only do reconciliation. I will not verify the AR balance which is given by the management. I will rely upon that balance. I will do this particular activity as agreed with the management. So I'll understand the nature of the engagement, purpose of the engagement. Okay, purpose means after doing this, how they want me to report and why they want me to report. Like what will be the purpose and the usage of this particular report, where they will submit this report. Third is the identification of the information on which I am required to perform the procedures. So identification of the ledger and sub-ledger balance. Ledger and sub-ledger balance. I need to identify this information. Okay, I'm going to perform procedures on this information. Fourth, once I have this thing, I need to plan it. Nature, timing, and extent of procedures. Like who will perform procedure from my team, what procedures they will perform for reconciliation. Okay, how much detailed reconciliation we are required to prepare. And fourth, any limitations on the distribution. Means distribution of report. Means I will ask management, do not treat this an audit report and do not distribute for any other purpose other than which you are asking me to do. For example, management asking doing reconciliation. Tomorrow, what if management present this report and says, okay, see, someone has verified my account receivable and he has audited this. No, that is incorrect. I have done just a reconciliation, not a audit of account receivables. As a result, this report should not be used for any other purpose than what it is meant for. That you need to understand. What is the purpose of the report? So that you can stop or you can apply restrictions on the limitations of the usage or the distribution of this report. Clear? So you need to plan these things and perform these things accordingly, and wherever required, you need to document the matters which are of importance, which are related to the factual findings. Let's say while performing the reconciliation, you identified some differences, reconciling items. You need to document that. And when it comes to the performance, you may choose to perform inquiry analysis, recomputation, comparison, observation, inspection, obtaining balance confirmation. Whatever the procedure is applicable in that scenario, you can perform. And then comes the very important part, is the report, which requires the report requires over here is a title, address, identification of specific information, statement that these were agreed upon procedures which are agreed with the management, nothing else, and a statement that this is performed as per SRS 4400. Then performance of agreed upon procedures, listing of procedures performed, auditor's actual finding, and this statement saying that this is not the audit or review, or no assurance is being provided from this particular report. And a statement, very important, that if auditor has performed any other procedures or a audit or a review, other matters might have come to the light. Means if auditor would have performed the audit of the AR, then there were chances that other matters might have come to the auditor's attention, which right now are not being looked into because we are not performing audit. A statement that the report is restricted to those parties for which it is being prepared. Report that this particular particular statement that this report particularly applies to specific elements. For example, AR listing, AR ledger and subledger, and you have a DPS, that's the date, place and signature. This is DPS, and this is TA and other information. So between TA to DPS, you need to have this other information in your report. Any doubt till now? This was SRS 40400, agreed upon procedures. Engagement to perform, agreed upon procedures. Any doubt? In your audit report, Abrakesh, sorry, not audit report, in your report, here, the term I am using is a report only. Position is this way. This is the hierarchy which is given in this position only. So for example, first I will have the TA, that is a title address, then this particular information, specific information of like I need to identify upon which I have performed the agreed upon procedures. This is the hierarchy you need to perform. Any doubts? Any doubts? I hope you it is clear with me. Abrakesh, any doubt on this one? Can you explain bit in detail? Actual statement should not come prominently means?
Good morning, sir. I am asking about the wording a statement that procedures performed do not constitute either an audit or a review and no assurance is provided. Shouldn't it not come very first? Because in these lines of, statements, the user may not observe this disclaimer.
See, here they are required to specifically mention this statement. This statement should be there. Like, this is not an audit or a review. This particular procedures do not provide any assurance, and this should be there in this way only. And if I understood your query correctly, that you want to understand that whether this statement should be in this format only or there should be something else in place of this one. Correct? So this statement should be there in detail, that and the position of the statement. Okay, the position of the statement should be it is the hierarchy which is given this one only. So once I will provide what are the factual findings, once I will provide, okay, this is something, the procedures were there, this is the factual finding, then this statement will come, okay, whatever factual finding is there, whatever procedures I have mentioned above, they are not audit, they are not, review. So that's why they do not provide any assurance. Once you identify the information, once you identify the procedure, once you identify or rather than identify, you mention the factual findings. Once you specify these three things in your report, then this statement comes into the picture. You do not start your report with this statement. No. Once these three things are given, then this statement should come as a like with respect to the position in the financial in your report, so that the users can understand basically, okay, this was the specific information on which agreed upon procedures are being done. Okay, these are the agreed upon procedures. Okay, this is the outcome of the agreed upon procedures. So now the user has an understanding what has been done as an agreed upon procedures. I do a top up on that. Okay, this is not the audit. This is something the agreed upon procedure, not the audit. So user then will have a good and clear understanding of what has been done in actual. Clear? Any doubt, Abrakish further on this one? Okay. So that was your SRS 4400. Now let's move to the next SRS. SRS 4410. That is a compilation engagement. Services, not an assurance engagement. So when I talk about compilations engagement, here I am assisting the management. Okay. Here I am assisting the management in preparation and presentation of financial statements. Okay. I'm compiling the information for them. Now that could be financial, that could be non-financial, that is there based on the type of information that I'm compiling. But here I'm preparing and doing the presentation of the historical financial information in a compilation way. So I'm compiling something, bringing some things together, where I am not giving any assurance. I am not giving any assurance. Understand that. I am bringing the things together. That's it. One thing was there, one thing was there, one thing was there. I'm bringing everything and putting it together. I'm not saying that these things which are put together are appropriate. I'm not saying these things which are put together, I'm giving any kind of assurance on that. No. It's just compilation of historical financial information. Understand that. So I'm talking about compilation of the historical financial information without obtaining any assurance on that information. That's why it is coming under the purview of related services. Are you guys with me on this one? Okay, I'll come to that point, Abrakesh, if there is an error in the compilation. Okay, now the objective of the auditor here, okay, is to perform this particular compilation engagement by applying the accounting and financial skills, financial reporting skills that he has, because he is being considered an expert in this field. That's why the objective is to apply accounting and financial reporting expertise of the practitioner over here. And the term we are using is a practitioner, not the auditor. Reason, because in our case also we used the term practitioner, not the auditor. Over here, if you see, it is the term practitioner. Now the reason is we are not issuing any opinion, we are not auditing. That's why the term practitioner will be used, not the auditor. Clear? So now the practitioners have to apply their accounting and financial reporting expertise to help the management in compilation of the financial information in this particular scenario. Okay. And then to prepare a report, and then they need to issue the report in accordance with this SRS. So this engagement is basically, where a person, a practitioner, is applying his accounting and financial reporting expertise for the compilation purpose. Now, what is the requirement over here? What is the requirement of the standard basically? The requirement of the standard, okay, is first of all, standard says that follow a code of ethics, ethical requirements basically. So comply with the ethical requirements, like without any fail. Now, when I talk about ethical requirements, we have already seen like professional judgment, engagement, quality control levels, things. So all these things are required to be followed. Then independence does not apply to compilation engagement also. Same. It is, as you know, it is not applied to related service because we are not giving any assurance. As a result, independence is not mandatory for these things. Independence is not mandatory. Then the requirement of the professional judgment, that while doing compilation, apply your professional judgment. Then it comes with the responsibility of the engagement quality control. SQC1 is also applicable. And before accepting the engagement, check with the client's acceptance and continuance. Remember, client's acceptance and continuance that we have already seen in SA 210 and 220 in detail. So that is something you are required to see over here also. You need to communicate with the management and those charges governance on timely basis based on your framework or based on your procedures that you are performing. So these are the basic requirements of the standard. Basic requirements. Once you comply with the basic requirements, you move to the next page or next portion or phase of the engagement, that is performing the engagement. When it comes to performing the engagement, understand the entity's business, operations, and applicable financial reporting framework. Then only you will be able to compile. Then only you will be able to bring things together. If I do not understand the financial statement, then how will I bring things together? For example, tomorrow I hire for you. Okay. For example, Mr. X, you do compilation of my company's financial statement. Now my company is a bank, listed bank. And the financial statement, for the listed banks are huge, different in many ways compared to the financial statement for a company. Okay, normal company listed on stock exchange or anywhere. So obtain the understanding of the entity's business. Then you need to do compilation of that particular financial information. Now, if you identify error, if you identify inaccurate financial information, if you are not satisfactory, if you are feeling that okay, the information is incomplete and the compilation would mislead or would be a problem, or there would be a problem in the compilation, error in the compilation, ask management to rectify. If management doesn't rectify, withdraw from the engagement. Simple. Here we do not have a concept of adverse opinion because it's a related service, not an opinion. That's why, first of all, in case when you identify an error, issue, incomplete information, unsatisfactory information, something which is not correct, ask management to rectify. If management doesn't rectify, and if you are not satisfied, withdraw from engagement. Withdraw from engagement. If management declines to cooperate, withdraw from engagement. You need to compile the financial statement only when the financial information compiled should not be materially misstated or should not be misleading. Means after compilation, if you think that compiled financial information is not materially misstated, is not misleading, then only do the compilation and issue the report. Otherwise, do not issue the report. And if withdrawal is not permissible, so sometimes, because of the contractual obligation, withdrawal is not permissible, then what you will do is check your legal and professional responsibilities. Check your legal and professional responsibilities, that what are your legal and professional responsibilities in this scenario, what you can do, okay, in this scenario. And then you issue the report. Again, when it comes to the report, it is similar. This is TA, this is DSP, and in between TA and DSP, we have other information like statement regarding compilation, description of management responsibility, identification of applicable financial reporting framework, identification of financial information, practitioner's responsibility, description of what compiled engagement entails accordance with SRS, means this engagement is being performed in accordance with SRS. Explanation that it is not an assurance engagement and we are not verifying the accuracy or completeness of the information. No, this is not our responsibility. And we are not issuing any audit opinion over here. This is just a reporting on the factual findings. If the financial statement which you are compiling are prepared based on the special purpose framework, then draw attentions of the reader that this is a special purpose framework, might not be suitable for any other purpose. That's it. So that is the reporting part under SRS 4410. Any doubt, guys? Any doubt? Any doubts on SRS 4410 or SRS 4400? No? Okay, if no doubts, what I suggest over here is let's take a quick 10-minute break. After the break, we'll gather back and continue the session. Okay, let's take a quick 10-minute break. Hello everyone, welcome back. Let's continue the session. So we were discussing about related services. Okay, SRS. Now let's take up few questions on the same, and then we will have a good understanding of this particular chapter. Okay, let's take up few questions on this one. So, question number 1. ABC Limited has engaged you, a chartered accountant, to perform agreed upon procedures on their account receivable balances as of December 31, 2023. The engagement letter clearly outlines the specific procedures to be performed, such as confirming the balances with customer, verifying aging, schedules, reconciling subsidiary ledgers to the general ledger. After completing the AUP, you prepare a report detailing your findings, including some discrepancies in the customer balances and minor aging classification errors. The management of ABC, having received your report, is now requesting you to add a statement that the effect of these procedures performed provides some limited assurance on the accuracy of the accounts receivable balance. As per SRS 4400, how should you respond to the management request? So how will you respond to the management request in this scenario? Come on, guys. How will you respond to this request in this scenario? Okay, Rakesh, very good. And why so? And why so? Come on, guys, quickly. Absolutely correct. Very good. Anyone else? So why, what would you do in this scenario? Come on. Management is asking you to include the statement that the effect that procedures that were performed provide limited assurance on the accuracy of the accounts receivable balances. Management is asking to include this statement. So what is the problem in this statement basically? What do you think is a problem in this statement? Very good, Abrakesh. Very good. Yes, absolutely correct. Come on, guys. Anyone else? So what do you think the issue here is in this particular statement? What is the issue in this statement? Okay, let's say for example, for a time being, forget about, the management is asking you to include this statement. If this particular engagement, let's say someone from your team only, or your let's say manager or director asks you to include this statement, what will you do? What will you do? Come on, guys. So let me tell you here, same it is. First of all, understand that SRS, it's a related service engagement. We are not going to issue any opinion other than the report on actual findings. So no opinion will be issued here. No opinion will be issued in SRS engagement. Okay, perfectly fine. Now, if I add a line that this particular, procedures provide limited assurance, let's say if it is providing also, see, there could be two scenarios where the procedures are providing limited assurance and where they are not providing limited assurance. Where they are not providing limited assurance, it's a not an issue for me. Direct answer, okay, I'll not include. But what if in actual the procedures are providing some limited assurance? Would you change your opinion? Let's say, for example, this confirming balances with customers, okay, reconciling subledgers. Then you have a like sending confirmation to the data, or to the customers for verifying the aging and schedule. Let's say in actual it is providing some limited assurance. Then what you will do? Let's say your procedures that you performed are in actual providing some limited assurance. Then will you include that? Not a reasonable assurance. Let's say some limited assurance is being provided by that particular one. If yes, then yes. If no, Abrakesh, then why no? Come on, guys. Very good, Abrakesh. So, whether your procedures are providing assurance or not, it's a secondary. For what purpose procedures to provide limited assurance to the readers and the users of the report? If yes, then it's an issue, like you can add. If no, means your purpose was not to provide limited assurance to the users. The way it is there in the SRS, our purpose is not to provide limited assurance. We perform the procedures which were agreed. It is the secondary part that whether they are providing any assurance or not. As a result, I will not include. So it doesn't matter whether they are providing assurance or not. If the purpose was not to provide an assurance, I will not include any line on the assurance part. Are you with me on this one? Are you with me on this one? Okay. Now the second question. What are the key elements that you must include in your report to comply with the SRS 4400 regarding the expression of assurance? So what are those key elements that you must include in your report to comply with the SRS 4400 regarding the expression of assurance? Come on, guys. What are those elements or statements rather? Come on. What are those elements or statements that you must include? Anyone? Yes, Abrakesh, very good. What else? What else? Okay, Monish. Yes, good. Yes. There is one more. Abrakesh, there is one more statement. Which is that one? There is one more statement that is required to be included. Which is that one? No, regarding the assurance. Regarding the assurance. Expression of assurance. Come on, quickly. We have discussed this one. We have discussed this one. Come on. I'll tell you. So there are two statements which are required. One, a statement that the procedure performed do not constitute an audit. So first one is a kind of, this is not an audit. So no assurance can be given. Similarly, directly linked to this one, that the statement that the procedures performed do not constitute either an audit or an review, and such no assurance is expressed on this one. Okay, so that is the first statement. And second is that a statement regarding that if auditor would have performed additional procedures like an audit or a review, other matters might have come to the light that would have been reported. Means if we was if we would have performed audit of the account receivables balances, then there were chances that other matters might have come to our knowledge and that we would have reported you at that particular point in time, but not now because we have not performed the audit. So these are the two statements that are required to be included with respect to your expression of assurance. One, that is it's not an audit or a review, and that's why no assurance is issued. Number two, this one that if we would have performed the audit, then other matters would have come to our attention, which we would have reported to you. Clear? Any doubt on this one? Okay, let's take one more question on this. XYZ Bank has extended significant loan to PQR Industries. As a condition of the loan, the bank requires an independent assessment of PQR's inventory valuation. As of March 31, 2024, you, a chartered accountant, are engaged to perform agreed upon procedures on the inventory valuation. The procedure includes physical verifying of a sample of inventory items, comparing the recorded cost to recent purchase invoices, and evaluating the company's obsolescence policies. Upon completion of the procedures, you prepared a detailed report presenting your factual findings. The report includes instances where physical count differed from the recorded quantities and the cases where the recorded cost exceeded the current market values. TQR Industries, eager to demonstrate a strong financial position to XYZ Bank, ask you to modify your report, state that the inventory valuation is fairly stated based on the procedure performed. How should you address the client's request? So how should you address the client's request in this scenario? So client is asking to add just one word, that is fairly stated. Now you have identified, some differences. So there were instances where physical count differed from the recorded quantities and where the recorded cost exceeded the fair market value. Let's assume this is not material. Assumption that this particular part not material. So the differences are not material as of now. Let's assume that one. What do you say? Should we accept the client's request to add the word fairly stated? Should we add the word fairly stated in our report or not? Very good, Aparakesh. Very good. Come on, guys. Should we add this particular word? Yes, no. Okay. Should we add this word, Monish? What do you say? Manish, you can check the schedule for the upcoming lectures which are there. So, for example, chapter 12, chapter 13 will be there. So 12 is scheduled on 28th June. So you can check the schedule for that. Okay. Mean that I'm issuing an opinion. But in report for the SRS, I need to list down the procedures that I have performed and the outcome of those procedures. I am not required to state that they are fairly stated, not fairly stated, how they are stated. No, that is an opinion. That is a conclusion I am giving. I am not required to give conclusion. So this is conclusion. And I am not required, and this is not required in SRS. Otherwise, it will not be a SRS. As a result, I cannot entertain this particular request. I cannot or should not entertain this particular request. The second part is a similar one that we have discussed till now. The second part is the specific disclaimers or statements must be included in your report to comply with the SRS 4400's no assurance requirement. So that we have already discussed. Any doubt till now? Any doubt? I hope it is clear till now. Manish, any doubt? Okay. If no further doubts, let's proceed to the next. I have a very good question, another question on this one only. You are a chartered accountant, were engaged by the DEF Holdings to perform agreed upon procedures on their payroll data for the quarter ended 30th September 2023. The engagement letter specified the procedures, which included verifying employee data against HR records, recalculating gross and net pay for a sample of employees, and testing compliance with the applicable tax regulations. Your procedure identified minor errors in data entry and a few instances where overtime calculations were incorrect. You prepare a comprehensive report detailing your findings and submit it to the DEF holding. So you prepared the comprehensive report and submitted it to DEF holdings. A few days later, DEF holding contacts you expressing concern that your report may not be sufficient for their internal audit committee. They request you to remove the disclaimer that statement indicating the additional procedures, had they been performed, might reveal other matters. They argue that this statement creates unnecessary doubt about the adequacy of the work performed. You need to comment on this one. So what do you think? Is it creating a doubt? Can we remove this statement if it is creating the doubt? What do you say? What do you say, guys? Come on, quickly. Can we remove this particular statement if it is creating the doubt? Yes or no? Okay, Abrakesh, very good. Very good. Very good, Manish. Yes, we cannot remove this statement. The reason because it is part of the reporting that we are required to do as per SRS, and that is mandatory. You cannot alter the reporting requirement of the SRS. No, we don't have, or we should not remove any statements which are mandated by SRS. Remember, we say that this agreed upon procedure engagement and the reporting is conducted based on SRS. Now, if there is something which is mandated by SRS, and if the client asks you to remove, no, we cannot. So in this case, we cannot remove the statement or the disclaimer. This one, the request you to remove cannot be accepted. Simple, straightforward. Clear with me? Any doubts? Any doubts? Okay. So let's proceed to the next question. Very good one. You, a chartered accountant, have been engaged by MNO Private Limited to perform a compilation engagement for their financial statements for year ended 31st March 2024. MNO Private Limited is a small size entity operating in the retail sector. During the compilation process, you gather the necessary financial data from the client and classify and summarize it and prepare the financial statement as per the applicable financial reporting framework. Before finalizing the compiled financial statement, you notice the following. The company has recognized revenue from a significant sale of transaction in March, but the goods were not delivered until April 2024. The company's inventory valuation method has been changed from FIFO to weighted average method without adequate disclosures. As far as SRS 4410, what are your responsibility in this scenario? How should you proceed to address these issues? So tell me, what should we do in this scenario when it comes to SRS 4410 compilation engagements? Come on, guys. Come on, guys. What is the responsibility of the practitioner in this case? What is the responsibility of the practitioner in this case? Anyone? Ask management to rectify. Very good, Aparakesh. Report the same? No, Munish. It is not regarding the reporting. It's not regarding the reporting. No. Any other answers? Nope. So what SRS says that 4410, if yes, very good, Abrakesh. If there are any errors, misstatement, inaccuracies, or if anything is not appropriate that you identify, in that scenario, what you are required to do? You are required to report the same to the management. You are required to communicate the same to the management. Okay. So, and if management doesn't rectify, even after, even you communicate to them in detail, in that scenario, you should withdraw. What if you are not able to withdraw due to the legal laws and regulations? What would you do? So let's say, for example, management is not ready to rectify and you are not able to withdraw. What would you do? Come on, guys. What would you do if you are not able to withdraw? Come on, guys. What would you do if you are not able to withdraw? So in that case, you will see, correct, Abrakesh, you will see legal and professional what is your legal and professional responsibility? Are you required to issue report mandatorily or not? What will be the implications on you when you will withdraw? Accordingly, you need to decide the subsequent steps and procedures that you need to perform. Clear? Any doubt? Okay. Let's see one more question. Very good one. You, a chartered accountant, were engaged by OPQ Limited to compile their financial statement for the year ended 31st March 2024. During the compilation, you discovered that the OPQ Limited has not recorded a significant provision for doubtful debts, despite evidence suggesting a deteriorating financial condition of some major customers. You communicated your concerns to the management, recommending that they recognize the provision in accordance with the applicable standards. Okay, accounting standards. However, management strongly disagreed and arguing that the provision was unnecessary and would negatively impact their financial results. They instructed you to proceed with compiling the financial statement without the provision. As per as SRS 4410, how should you respond to management refusal to amend their financial information? So what would you do in this scenario? What would you do with this in this scenario? Come on, guys. What would you do in this scenario? So first of all, no, that is a last step, Rakesh. You need to check the first step also. That is the last step that you are referring over here. You need to look into the first step also. No, Abrakesh, there is a first step. Anyone else? Munish? Anyone else on this one? Come on, guys. So, I'll tell you. The first step over here is to understand whether not keeping the provision or not doing the provision is resulting into misstatement, inappropriate or misstatement or inappropriate compiled financial statements, or would mislead the users If yes, then I will say that okay, it's a material one, and then accordingly all the procedures will be followed. But first you need to understand that okay, it is resulting misstatement, it is inappropriate, it will impact your compiled financial information or financial statement, and the users would be it will be misleading for the users. If that is a scenario, then yes, go ahead and ask management to rectify. So there should be some incomplete, inaccurate, or otherwise unsatisfactory issues that should be arising from this one. Now let's assume this particular part, okay, is not material. For a time being, let's assume this is not material. So the provision over here, deteriorating financial conditions and significant provision, this particular part is, let's assume for time being, is not material. How would you deal with this one? If I say this is not material, still would you ask management to rectify, and if management doesn't rectify, then you will resign or withdraw? Understand, let's say this is not material. I'm saying this is not material. What do you suggest? Still asked to rectify, okay. Let's say management is not agreeing to rectify. So this, for time being, understand, not material, okay. The observation is not material, and management not rectifying. What will you do? Very good, Rakesh. Very good. So what will you do in this scenario? Come on, guys. What will you do in this scenario? Come on, guys, quickly. So here in this scenario, what I will do is simple. I will issue in my factual findings the details about the error. Means I will not withdraw, rather I will provide the errors, or I will provide the details of the factual finding in my observation. Remember, I do have a section for the factual finding. So if in my factual finding, if this is not a material, I can specify this error and I can still issue the report. Simple. Compile, issue the report, and mention about the factual findings, which should contain your error. Straightforward. No need to withdraw. Are you getting my point? Any doubt to this one? Any doubt, guys? No? No doubts? Is this clear? Okay. If this is clear, let's proceed to the next chapter then. Okay. Chapter number 10. Now, this was chapter number 9, SRS, related services. Now, we will proceed to the chapter number 10. We'll again use Saransh. It's very, very good. It's very well drafted. I would refer everyone to review to go through this one. So chapter number 9, chapter number 10 is basically on the standards on review engagement. Okay. So what is the standards on review engagement? That is we need to understand. And how they are different from SRS that we have done till now. So if you see chapter number 10, it talks about review of financial information. Now, review of financial information can be historical financial information, can be interim financial information. But these are the review engagements. And we need to understand the difference between review engagements, related service engagement, and audit. So, I'll write 3 words over here. 1, audit. 2nd, review engagements. And 3rd one is your related services. What is the difference between all 3? Can anyone tell me the difference between the 3? Can anyone tell me a difference between all 3? Okay, Brakesh. But I'm expecting more answer on that one. There is a specific element which is changing in all the 3. Which is that element? Specific element which is changing in all the 3. No. No, Brakesh. There is a specific element which is changing in all the 3. Correct, Munish. But what about the rest of 2? Come on, guys. Let's talk about that specific element that is, not constant, which is changing in all 3. We have discussed in first and last. We have discussed about that element in audit in related services. It's the assurance factor. Guys, assurance. I think you have not went through the lectures that previous lectures. You have not went through previous lecture, guys. That is, I could say, assurance factor. So if today, understand one thing, the level of assurance is different between the 3. Level of assurance I'm talking about. So let's say this is a scale of assurance if I talk about. Okay. This is a scale, assurance scale. And I'll just. Now, if this assurance scale is here, then in that case, I need to refer these particular services on the scale of assurance. So when it comes to the audit over here, it is a reasonable assurance. When it comes to related services, it is no assurance. On the assurance scale, related services is no assurance. When it comes to review engagement, this is limited assurance, which is between the reasonable and no assurance. That is not that much as a reasonable assurance, but some kind of assurance being provided. On an assurance scale, if I talk about review engagements, these are the limited assurance engagement. So I am giving assurance, but some limited, not like an audit. But even I cannot say it's a zero assurance like a related service. So there is something, but limited assurance. Clear with me? Any doubts? So now you have a fair idea of difference between all the three: audit, review engagement, and related services. Now, what SRE talks about? The first SRE is 2400. That is talking about engagement to review historical financial information. This is very important to understand. So we are reviewing historical financial information, means those financial information which are already issued, financial information or financial statement which are already there in the market, or already issued by some auditor, or already that they have been issued in past, historical. Okay. Now here the term which is being used is a practitioner. Again, reason because why practitioner? Reason is that the historical financial statement might have been issued by another auditor. So the person who is reviewing the financial statements, historical one, and the person who has actually audited in full terms could be different. That's why we use the term practitioner over here. Clear? Now, the scope of SRE deals with the practitioner's responsibility when engaged to perform the review of historical financial statement. And he is not the auditor of the entity. Understand? That's why we are here using the term practitioner, because he's not the auditor of the entity. Now, the objective of the auditor under review of a historical financial statement. Okay. So the objective of the auditor under the review of historical financial statement is that here the auditor has to issue limited assurance, primarily by inquiry and analytical procedures. So I am basically, leveraging my work around inquiry and analytical procedures. I am here focusing more on the inquiry and analytical procedures than the other part. The reason because here I am supposed to give limited assurance, not the reasonable assurance. Hence, the procedures which are performed for the reasonable assurance, like observation, inspection, calculation, recalculation, reperformance, here I will not be performing those procedures. And as a limited assurance point of view, here I will be saying that whether the financial statements, okay, are free from material misstatement or not, but in a different way. So, can anyone tell me what is a paragraph of, opinion that we write in the audit? Like when it comes to the audit, what is the opinion paragraph we write? If I talk about unmodified opinion in an audit report, what is the paragraph that you write? Anyone? What is the paragraph that you write in an opinion in an audit report? Basically, in our opinion and to the best of our information and knowledge, the financial statement provides true and fair view of the books of accounts and the state of affairs, something like that. Okay. So we say that it provides true and fair view, or it complies with the whatever, if it is a compliance framework, then it complies with the relevant applicable financial reporting framework, or is prepared in accordance with that framework, or it states the true and fair view. So we say that it's a positive sentence. But when we come to a review engagement, when it comes to the review of historical financial information, in that scenario, it's not a review, it's not a positive statement that we are talking here. Nope. We are not talking about a positive statement over here. Understand? The report that we issue, we say over here is that based on the procedures performed, nothing has come to our attention which could lead me to believe that the financial statement contains a misstatement or are not fairly stated. So we issue a kind of negative opinion in the limited assurance. So you can also say a kind of negative opinion will be there. So that negative opinion brings the portion of a limited assurance. Now the requirement of SA are pretty simple. We have to comply with the ethical requirements, relevant ethical requirements, including pertaining to independence. Now independence again became mandatory. Reason because we are issuing a kind of assurance, but it is a limited assurance, but still we are issuing the assurance. Hence, wherever there is an assurance, there will be independence. It doesn't matter it's a limited assurance, reasonable assurance, or any kind of assurance. Till the time even a small assurance is also there, you have to be independent. So comply with ethical requirements along with the independence, maintain professional skepticism and exercise judgment, professional judgment. Responsibility is required to be taken at the engagement level by the partner. Okay, so same engagement quality control will be applicable. SQC1. You need to check for clients acceptance and continuance the way you do in SA 210 and 220. You need to determine whether the preconditions for accepting the engagement are met. What could be the preconditions, guys? What do you think could be a precondition here? We have already seen precondition something in SA 210. What is the precondition over here? What could be the preconditions? Simple. Whatever there is SA 210, that the acceptability of the financial reporting framework, agreement of the management that they understand their responsibility of preparation and presentation of financial statements, including internal control, providing all the information to the practitioner for the purpose of review. So that is the preconditions, same that we have in SA 210, sorry. So all these preconditions are required to be satisfied here also. Any doubt? You need to then agree the terms and conditions with management, and accordingly then you need to communicate with the management throughout the audit. So agree the terms and communicate with those shared with governance. Any doubt with respect to the requirement? No? Okay. So once after the requirement, there are performing the engagement, like planning and performing. It's again pretty simple. Okay, we are required to plan and perform the procedures, but here mainly the procedures are inquiry and analytical procedures. We have to design for whole of the financial statement. It is not the scenario, okay, it's a limited assurance, I'll not go for the P&L. It is a limited assurance, I'll not check balance sheet. It should not be the case. So FS as a whole. So I first need to determine materiality for the FS as a whole and apply it in designing and proceedings and evaluating the result. Even though it's a limited assurance, I need to perform procedures for whole of the financial statements. Are you understanding, guys? So even though it's a limited assurance, I cannot say, okay, I'll not check cash flow. I'll not check balance sheet. I'll not check current assets. No, I need to check the financial statement as a whole, okay, including all areas based on materiality. Now, how will you define materiality here? In limited assurance engagement, how will you define materiality? Come on, guys. Very important question. For limited assurance procedures like inquiry and analytical procedures, how will you define materiality? I have written, or it is written, that determine materiality for FS. How? How will you do that? Like, this is not an audit, but how will you do that? How will you define materiality? On what basis? Come on, guys. Let's say, for example, let's say in audit, we take 5%, 10% as an overall materiality. How will you decide in this particular case the materiality? It's pretty simple. Whatever, you know, you need to take a judgmental approach in this way. So SA 320 also says that if you cannot apply the materiality directly, you can, use the judgmental approach. Means if the misstatement is going to influence the decision of the reader, in that case, you need to think from that point of view. Okay, it is material enough. So you need to think from the point of view that, okay, whether a particular item will influence the reader or decision of the reader. If yes, then it is material. So based on the judgmental approach, or you can say professional judgment approach, you need to define materiality. Okay. Then you need to obtain understanding of the entity the way you do in the audit, understand the entity, design and perform inquiry and analytical procedures, remain alert for the related party relationships, remain alert for the fraud and non-compliances. Okay. Then consider management assessment of going concern, obtain evidence that the FS agree to the entity's underlying accounting records, additional procedures. If you identify something, then perform additional procedures. Subsequent events, look for the subsequent events, request management to provide written representations, evaluate evidence obtained from procedures already performed by you, and effect on the practitioner's report. If you see all this, it is a same like essay. There is nothing different. Understanding the entity, 315. Analytical procedures. If you want to perform audit procedures, you draft a response as per 330 and you perform it under 500. Related party, 550. Fraud, 240. Then underlying accounting, obtain evidence that the FS agree to the underlying accounting records. Basically, audit evidence. I need to collect audit evidence as per SA 500. Additional procedures, again, evaluation of misstatement and SA 500, 450 plus 500. Subsequent event, 560. Request management, provide written representation, 580. Procedures performed, 450. Evaluate your outcomes. Okay. And evaluate effect on practitioner's report, again, 450. Entity's ability to continue as a going concern, 570. So whatever we have seen till now, it is the same. The logic is the same for the audit or a review. In audit, we perform the detailed procedures. In audit, in review, we'll perform some small set of procedures. But the base, the logic, it will be the same that you have learned during the audit. So it's not something new that you are learning. It's something that what you are learning over here is the procedures of the audit, the details and the level of detail that we used to do in the audit, how to modify that for a limited review engagement. Any doubt till now? Now, forming of conclusion on FS. Forming of conclusion. That is simply nothing but your SA 700 series and the practitioner reports. Application of SA 700 series for a review of financial statement items or review of financial statement engagement. How I tell you. Now, as I told you that, we are issuing an opinion over here, but a limited assurance opinion. And as a limited assurance opinion, we have to say it's a negative opinion. So how it is words? The word says that, okay, that nothing has come to our attention that causes to believe that the FS are not prepared in all material respect in accordance with the applicable financial reporting framework. So we modify the sentence in a negative form to make it as a limited assurance opinion. Any doubt? Any doubt, guys? Okay. The second thing over here is that we here, if we can express modified opinion, it's not restricted that we cannot issue modified opinion. If we have identified something, okay, which is, kind of a misstatement, material misstatement based on the materiality, we have to modify our opinion. Okay. And we can express a modified opinion by saying that the FS are materially misstated or sufficient or appropriate evidence cannot be obtained in relation to one or more items in FS that are material in relation to FS as a whole. Because we are performing analytical procedures and inquiry, there could be scenarios that you have identified material misstatement and you do not have, nature or timing or extent to perform additional procedures, or you are not able to gather more audit evidence to substantiate that particular misstatement. In that case, you issue a modified opinion. Now, it could be qualified, it could be adverse, like that is both available. Clear? And even if you can issue disclaimer of opinion if the impact or the effect of not getting appropriate audit evidence is material and pervasive both, then you can think of issuing disclaimer of opinion also. Also, if you do not want to issue disclaimer of opinion, you can withdraw from the engagement, provided it is not prohibited by law, or you can do so. Simply the same that what we have seen in SA 700 series. Nothing different is there. Any doubt? Then the reporting part. Again, reporting part is pretty much, what it says that starting with TA, that is title and address, ending with DSP, and you have the rest of the content in between. The reporting is between the TA and DSP in each and every report. Now, what it has to include is introductory paragraph identifying the FS reviewed, that you identify, okay, which financial statement you reviewed. Because it's a historical financial statement, you need to identify the financial statements. The summary of the significant accounting policies, other explanatory information that you have reviewed. Then description on the management's responsibility. What is the management responsibility in this scenario? Sorry. Okay. Then if it is a special purpose financial statement, then you need to talk about the special purpose financial statement because something is different. Then you need to provide practitioner responsibility to express and conclusion. Then you need to provide about a review engagement, that this is a review engagement, is a limited assurance engagement. Procedures consist of only inquiry of the management and analytical procedures. So we are not doing anything else. And procedures performed in review are substantially less than performed in audit. So you explain about review engagement and then you give your conclusion, whatever conclusion it is. If it is a modified opinion, then you need to provide basis of your conclusion. Okay. So paragraph that contains modified conclusion and the description of the same, basis of the modified conclusion. You need to give reference to the ethical requirements because here we are required to follow, and then DSP, date, sign, place. That is the reporting part. Any doubt with respect to this one? Any doubt with respect to SRE 2400? Okay, Viraj. Okay, Monish. Okay, Rakesh. No? Okay. Then let's take one more SRE 2410, which is the next one, which is there as a part of the chapter. Now, this SRE, okay, talks about review of interim financial information. Interim, not the historical. We are talking about interim over here. And that is performed by the independent auditor of the entity. So we are not using the term practitioner over here. We are not talking about historical financial information. We are talking about interim financial information, and that is also being performed by independent auditor of the entity. Now, if I frankly tell you the difference between both of them, okay. Now, here the purpose and objective of the standard will be different. Here the purpose is to guide the auditor's professional responsibility, provide a guidance on the auditor's professional responsibility in case of a review of interim financial information. Okay. Now, interim financial information means not the statement. Again, I'm not using the word interim financial statement. I'm using the word financial information because it is interim. I am doing the audit also, but financial statements are not ready. So I am talking about only information. And the objective is to issue negative opinion, limited assurance. Is one that instead of statement, I use the term information, or instead of practitioner, I use the term independent auditor of the entity. In SRE 2400, I was talking about financial statements and the practitioner. Here I am talking about interim financial information. Here it was historical. So first of all, your subject matter is changing. Here in SRE 240, the subject matter is interim financial information. Why not statement? Reason because statements, if I talk about financial statement, they are, more detailed one than compared to the interim financial information which is issued by the companies. And, auditors review them as a part of the requirement, legal requirement of the listing agreement. So that's why we are using the term interim financial information, not the statement. Number two, as it is done by the independent auditor of the company as a part of the listing agreement also, okay, or ICDR requirements. This is something which is, predominantly performed by the independent auditors. That's why here the term independent auditor is used, not the practitioner. And if I talk about the requirement part wise, whatever requirement is there for this particular, standard, it's same. For example, comply with ethical requirements relevant to the audit of annual financial statement, implement quality control, plan, perform audit. Then you are agreeing the terms of the engagement. Now here the only thing is, when you are agreeing the terms with the client, you are understand that you are auditor, independent auditor of the company. Okay. So accordingly, you need to think of both the engagements, annual plus interim. So over here, whenever we are talking about the procedures, we have to think from both point of view. Annual also, interim also, because we are the ones which are performing the procedures over here. Okay. So for example, having an understanding of the entity, its environment, including its internal control, as it relates to both annual and interim financial information. Okay. Now, doing the procedures, performing everything, it is the same that we have seen till now in SRE 2400. So the rest of the procedures, rest of the things are not different. We'll come to the reporting part. In reporting also, first you start with TA, that is a title and addressee. Then it's same identification of the financials information. You need to provide the details about the financial information, what it comprises. Okay. Then management responsibility, auditor's responsibility. Okay. That the review is performed as per SRE 2410. That the review is substantially less in scope than audit and is not conducted in accordance with SA and does not enable auditor to obtain assurance. Okay. Accordingly, financial reporting framework, fair presentation, on what basis the financial information is prepared. And then your conclusion. If you have an unmodified, then conclusion. If you have a modified, then details of that modified conclusion and DSP. It is the same that we have seen in SRE 2400. Not different. Any doubt till now? Any doubt with respect to SRE 2410? The only difference I'm talking about here is first, interim financial information. Second, it is being performed by the independent auditor. And accordingly, here, I need to tweak my procedures because I am the auditor also. I am performing procedures on the interim financial information, not on the historical financial statement. In the historical financial statement, I had the financial statement, I had the previous opinion. Here, I don't have that. Accordingly, I need to think of the procedures. Accordingly, I need to modify my procedures. Over there, the review was on the historical financial information, the information which is, historical financial statement, which are already issued. Here, I need to verify the interim financial information that has been issued or that is going to be issued, like what is the framework that is used, which NDS is used, whether it is used whether the financial information is prepared appropriately based on the framework or not. Those are the difference over here. Any doubt? Any doubt, guys? So that was your chapter 10 about the SRE, which contains two important SREs. That is 2400 and 2410. For the next lecture, guys, what I want you to do, number one, go through the lectures which are already uploaded. Please go through those lectures. That is very important. Okay. Without that, you won't be able to, grasp the good understanding of these standards, because we are here dealing in a summarized form. Over there, I have discussed these standards in a detailed way. Second, be prepared with your doubts, with your questions, so that in the next lecture, when we discuss about a particular standard, like chapter 11, or we discuss about, the chapter 12, you should be ready with your questions. The more questions you will ask, the more understanding you will get about the topic. Okay. So next lecture is on 28th of June, where we will be taking up next two chapters, 11, okay, and 12. Also, please provide your feedback. That is really, really important for us, and very important to understand that whether you are liking the lectures, whether you need something else. If yes, then we can try to include at least. Okay, guys? No, it's only 11 and 12, not 14 and 15. If time permits, then we will take 13 also, but it's only 11 and 12. Okay, guys? Any doubts? Okay. If no further doubts, we have ma'am with us, Karuna ma'am.
Hello,
Yes,
am
ma'am.
I audible?
Yes, ma'am.
Yeah. So I hope students, you are preparing well. And for new scheme, this is new topic, right? And today we have studied with the help of Saransh also. So please understand the difference and implication of SRE, SAE, SRS, and SA 800 series thoroughly, because it's new. But of course, no application and analysis based question will be asked from these topics. So I think Harshad sir already told you that first you need to read the chapter carefully, because whatever is covered in the chapter is only that much part is applicable for your examination. So please read the chapter carefully. And then, of course, just like Saransh booklet, you can make your own flowcharts and you can revise with the help of the same. Right? And do more and more, practice more and more questions. And writing practice is very, very important. Right? So please do more and more practice. And in case if you have any query doubt, you can ask through mobile app. Ask your query feature is there. I hope you all have downloaded. So please, with you definitely raise your question or your query. We will definitely be answering you. And provide your feedback on the lecture in case if you feel some more should be added or time is not sufficient or whatever is your feedback, please feel free to provide your feedback, because your feedback is very, very important for us. Right? So with this, I thank her and study in depth and wish you all the very best. Would you like to add something, Harshad sir?
No, ma'am. You have covered faithfully.
And we are having a session on 28th of June. So then please watch all the recorded lectures which are uploaded on the BS Knowledge portal and available on mobile app. So just watch the lecture and practice, right? With this, thank you. Thank you very much. Thank you, Harshad sir. Thank you, team.
Thank you, ma'am.
Ayaji, we can